Here's the 4-hour chart for Bitcoin. He tried to draw the trend line, but it didn't work out. There will be Poland, but it won't be here. Bearish flag. Analyze liquidity grab. With a drop below the 87 to 88 marks, it's still uncertain. But let's analyze how likely the liquidity grab is right here. So, around $90,000 and a spike down to the monthly S3 pivot. But let's analyze how likely the liquidity grab is right here. So, around $90,000 and a spike down to the monthly S3 pivot. The price sometimes tests it. In regular markets, that's normal. It happens. This is considered a deep correction, although according to some indicators it is already deep. So, we're grabbing this liquidity as well, and possibly questioning this one. That is, we end up trading through this entire sideways movement. Let's go back. This chart shows the situation for short-term investors. After the recent correction, the value has fallen to 0.53. So, if at the peak this value was supply and profit, averaging 0.98 or 98%, after correction, it dropped to 0.53, nearly half. Looking at history, we're discussing a 50% drop in profitable coins among short-term investors from peaks, not just their total profitable holdings. I'll remove the red lines for clarity. The level of a 50% drop in profitable coins in short-term investors is the focus, not just their overall profit. This often marks correction end. For example, in January's correction post-Bitcoin ETF approval, as the market dumped, this indicator fell to 47%. Was somewhere around the end of the correction. So, during the strong correction in January, when people started selling off, this indicator dropped to 47%. Now it was at 53%. During the bull run of 2021, we hardly ever reached 50%. It's at 53%. During the 2021 bull run, we rarely reached 50%, 81%, further back, 78. If we look further, 78, 2021, barely hit 50, processor 82. We hardly ever reached that. 81 module. 83, 78, 82, 83, 78, 82, 83, correction at 63, then Chinese ban. In 2021, the indicator was stable. In 2017, volatility and low liquidity caused deeper drops at 37%, 54, 79, 65, then bear market, a couple of 40% drops, but no bull market. It just rose. We dropped 3 times in 2017. Now, we've dropped quickly. A 50% profit cut from short-term peaks shows a mirror level. 56. Well, that's probably it. 79, 65, that's it. And then it was just bear market territory. A couple of times there was a 40% drop, but at that point, there wasn't a bull market. It just went higher. Alright, we can consider that if we tie it back, we dropped 3 times. During this bull run in 2017 over the entire period. Now we've done it quickly. We've already dropped down. What's interesting is if we take this level. A 50% cut in profits from the peaks of the short-term holders, we'll see that it's actually a mirror level. This is a chart from 2017, so over the last 7 years. And it serves as strong support in bullish markets and strong resistance in bearish ones. It's a mirror level, a strong one. We've met the minimum target. There shouldn't be significant divergence, as there are enough losses. Greater losses might cause panic. It's early to fall this deep. If we push them into even greater losses, they might start to panic, and that could affect the long-term holders. As for the timing, I'll say it again, it's still a bit early to be falling this deep. Next up, we've got the momentum of realized profit, that is, the realized profit-loss ratio momentum. It didn't just drop to 0, but even into slightly negative territory. As of the 24th of December. So, it dropped to -3%. After such a pump during a bull run, that's normal. This is also considered a strong correction. If we look at the drop in January, it's the same thing. There was a slight loss, and then a new wave of momentum kicked in. Now we've arrived at the same point. The first slight loss since Trump's victory regarding the momentum of this particular indicator. And hypothetically, we could go higher. Current prices, 21 years, all of it. Bull run. They look very similar. There were bigger losses here, and the corrections were a bit larger because there was still less liquidity in the system than there is now. There's a weak drop here, which is basically enough. A few days of trading. In negative momentum. Growth. growth. The year 2017 was more pronounced in terms of volatility, but the essence was similar. This sinusoid moves very distinctly, very sharply, unlike the current values. We're leaving, and then we come back. It's better to compare this indicator with 2021 because it reacts very strongly to volatility. And the year 2017 had significantly higher volatility than the current one. And the year 2017 had significantly higher volatility than the current one. That is, there is also enough correction for this metric. It seems that's all enough. We can trade a bit and move on. Next, we have the indicator showing the percentage of long-term holders. We're moving into the long-term holders group, looking at the total volume they hold. So, at the peak, we had about 0.35% of their total number who do not own Bitcoin, down to a correction of 0.16% now. So, at the peak, we had about 0.35% of their total number who do not own Bitcoin, down to a correction of 0.16% at the moment. 0.15, 0.16, that's the level. Something interesting. So, this level is roughly in the area of the ATH, that is, when the price is within the ATH range, in a place that has never been seen before in previous cycles, it's the same thing. The level at 0.15% was a mirror level. This chart is connected over 2 weeks, by the way, so that's 0.15%. We can take a look. The price reacted quite strongly to it in all the recent cycles, whether it was 2017 that acted as support or 2021. By the way, after breaking through the ATH, that's why I'm taking note of it. So, what have we come to now? Just like it acted as resistance during bear markets or when the price was below the zone of the ATH. The average level has almost always been respected. Right now, we're almost at it. There have been dips lower, but again, there's a 2-week lag, though not often. It happened more often in 2017. In 2021, this level was always respected clearly. Right from it, there was an upward correction afterwards. So, it wasn't just a correction, but the correction was coming to an end. The growth continued. So, this indicator, the 3 I've shown, indicate that the current correction is sufficient overall. And we shouldn't drop any lower. Don't go into Bitcoin. We could go above the 50 moving average from the current levels. So, the market has basically gone through a high level of pain, a high level of fear, and if not directly from the current levels, then it could trade in this sideways movement for a while, and then move higher. But we shouldn't break the recent lows around $91,000 with a close. And now I'll show you other indicators that, on the contrary, suggest that we're just a little bit away, but really just a tiny bit. Let's move on to them. This is the average purchase price of all Bitcoin holders, so the super short-term holders, I call them SH+. Those who hold their Bitcoins for up to 1 month. So here we've gone below their average purchase line. And if we look at the history, when the price goes below their average purchase line, it rarely comes back up with a V-shaped reversal. As a rule, it tends to make one more additional phase before it goes on to conquer new all-time highs. Again, January 2024. So, we dipped just a bit below it. We tested A3. As we speak, we're retesting it, but now from the bottom up. And then there's the additional phase. Then we head off to conquer new all-time highs. The year 2021, the same thing. We dipped just a bit below it. We tested A3. Additional phase. We went off to conquer new all-time highs. The same thing in 2017. We've gone lower. We're retesting. Add-on phase. We've gone lower. We're retesting. Add-on phase. That's it. But if we just touch and bounce back, then usually we don't retest anything. We're going straight up. Be it in 17. That was in 21. This has happened a few times this year. We've seen that happen too, for instance, in March. If we go lower, like now, we tend to retest it more often. This is a bit concerning for me. And the retest could very well be with a spike through that very $90,000 mark, with a quick breach. Moving on, yesterday was the first day of net inflows to the exchange. since November 7th, basically since Trump's victory. So, when the price returned to the $100,000 mark, people started locking in more profits. Suspecting that we wouldn't break through the $100,000 mark on the first go. That stopped the market. So now it's gone into what's called a pre-consolidation. Well, since November 7th, we've had the first inflow, although before that, there were some really strong outflows. Next, the profit of the cohort of holders, short-term holders as well, is also up to 1 month. So they've now gone into a net loss of about 4.5%. Here, there's often a certain situation. Well, not that it happens more often, but it does happen. The fact that we're turning around through divergence. For example, the price is making a new low below the previous one, while the indicator is making a new low above the previous one. So in this case, it's convergence. We're turning around. So the same can be said about some other situations. Here, the lows are either higher than the previous ones or at the same level, but here the lows are below the previous one. We're turning around, so that happens quite often. So far, we've only drawn one line. So, it's possible to have one wave of a dump and then turn around from it right from the current levels, but it's a bit tricky. Judging purely by the statistics of how this indicator has performed, although it's not out of the question. Next. This is a chart that shows how long the price of Bitcoin stays above the 50-day moving average. Above the 50-day moving average. So, it closes with the body above the 50-day moving average. It's now the 77th day. 77th. If we look at the history of how it was before, then yes, it could have been longer. 2021, it was almost 200 days. Price above 50-day average. 2019, it was 146 days. 1917, under 130 days. And in 17, it was no longer than 130 days. But practically every time, we saw at least one correction that dipped below the 50-day moving average. That was the case, for example, in January when we hung around below the 50-day moving average for about 6 to 7 days. That was the case in 2021, just a little, and then the Chinese ban. And that happened quite often in 2017. 1, 2, 3, 4. We were below the 50-day moving average for about 7 to 10 days, after which the price quickly bounced back and went on to test new all-time highs. Right now, it seems like we've grown quite a bit with this wave of increase, but it's not like we're hitting any unbelievable figures that can't be sustained. So, there have been higher values, even double what we saw in 2021. But the situation shows, history shows, that this is possible, and it could be a good entry point, or a chance to add more, like in my case, because I'm already in a long position on Bitcoin. I apologize, yes, adding more, or the first entry point. If you're not in a long position and you're waiting for the market to dip, then those will be the ideal entry points, and you should jump in without hesitation. And even if we end up crashing into a bear market, at least you'll know that you took that opportunity. And that was the best entry point. Next. What's got me a bit on edge is this, one of my favorite indicators, which is the realized profit to loss ratio averaged over 2 weeks, or 14 days. And what really concerns me here are the divergences that we've drawn. With the price over 2 weeks, it's not even by the day, it's over 2 weeks. So it's pretty much the same picture. In fact, a similar picture was seen in January, the exact same divergence. Exactly the same, we're making the final spike, which is higher than all the others. The final spike, which is higher than all the others. So basically, there it is. A head and shoulders pattern is forming, and it's the same here. And we're heading down below the extreme greed line. So we're heading straight down to the cooling line, so to speak. This is the average yellow line. And the price then dropped by over 20%. Here, the situation is very similar with the divergence, and exactly the same 3 peaks as we saw back in December-January last year. This is really stressing me out. The only thing is that it's lagging by 2 weeks. And what the indicator will be in, say, 3, 4, 5 days, I don't know. If we stay, it may drop. Holding above $91,000, divergences can have serious consequences. That'll be enough. But if we can at least hold within the current range without closing below the $91,000 mark. It's hard to guess how things will turn out. However, looking at history, divergences with this indicator have had more serious consequences. This is probably the main indicator that I'm worried about. In 2021, we periodically descended to the line of extreme greed, unloaded to the neutral middle line, pricked it several times, drew, went through divergences, that is, everything was here, everything that was possible. In 2017, this was even more pronounced due to the wild volatility of the market. The same thing happened. We went to the average line several times and through divergences. By the way, here's an example of a divergence. We had deep corrections here, and every time this indicator shows a divergence, it leads to a strong correction. And now it's the same. The only question is whether this correction is enough or if there will be further offloading. The answer to that is as follows. If we can hold in this range on the 4-hour chart for a while, let's go back to Bitcoin. If we can hold here on the 4-hour time frame for some time, I don't know, maybe until January 1st, that might be enough. Then the indicator will move out of the extreme zone, and we could start to rise from the current prices, give or take. Or if everything goes faster, if the bulls can't hold these zones on low liquidity, then we'll head up to the height of this consolidation, which is around $85,000. But that's a quick spike with a fast return. Objectively, this is S3, the monthly pivot, and here is the perfect entry point. In my case, this will likely be a point for accumulation. I'll just average down. My first entry into a long position will average out around $92,000, and I'll just move my stop loss lower. My position will be not X1 but X2. I do this quite often, and even in my case, it's still a small risk. A big risk is when I go for X6 or X8 when I average down too much, but X2 is standard. So I'll think about what to do if the price comes here. But still, considering the whole set of indicators, for this scenario, for us to go with a spike to $87, I'd probably give it a 25 to 30% chance, just like I mentioned yesterday. So I'll think about what to do if the price comes here. Considering all indicators, for a spike to $87, I'd give it a 25 to 30% chance. 70% I'd allocate to this consolidation being enough. I'd say about 25 to 30% chance, just like I mentioned yesterday. And I'd say about 70% chance that this consolidation will be enough, because, after all, by many indicators, we've really offloaded quite well. 2 days in a row with liquidations of around $1.5 billion, the market has really felt some serious pain. Altcoins have corrected from their peak by 50%, well, from 40% to 60%. Some memes have gone up to 70%. That's enough for the higher markets. So, generally, after that, it all goes into consolidation and then further growth. Well, either Bitcoin will just keep falling on its own along with its dominance, while everything else stays put and doesn't move anywhere. Otherwise, it's a shift into a bear market, which, I'll reiterate, is still a bit early in terms of timing. So that's the conclusion. In any case, I'll write down everything I do next. If you found this blockchain analysis interesting, please give this video a like. I'll take that to mean I'm not doing this work in vain, because preparing this material is a bit more complicated than just opening a chart and saying, well, folks, we're roughly under the moving average and we'll probably head that way.